Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Mark Sebastian, COO of Option Pit, to discuss how VIX and VIX futures are priced this election day 2020 and what that signals about the outcome in months ahead. Welcome. It's great to have you with us. As always, welcome back to Trade Talks.
Yeah, it's good to be here. Thanks for having me.
You got it. And just run us through, what are you seeing in markets right now, and what does that indicate for any sort of outcome?
You know, it's really pretty fascinating. We saw the VIX absolutely blow up over the last few days and weeks as COVID got really high and as there were fears about is there going to be a contested election. As I look at markets, some of that fear of a contested election is starting to come off, but it still is there, because if you look at where volatility was in 2016 or 2012 or 2008, you know, we're off the charts high. With the VIX at 35, the vol Q, the Nasdaq 100 Volatility Index, is at 3504 right now. That is pricing huge movement. Both indexes are pricing themselves for about a 2% daily move. To put things in perspective, the last time we were there, they were pricing less. The last election, we were pricing a less than 1% move. Last election, the S&P 500 moved about 138 points. If we have something similar to that on this election, it'll be 210 points, which would be absolutely off the charts. I don't think that's going to happen. Personally, I think volatility is overpriced, but the way we are currently set up, we're looking for some fireworks tomorrow.
Well, I also think investors and traders might have gotten used to these extreme moves in the market, because a 2% move either way tomorrow is nothing different than what we've seen with 2020 between COVID-19 volatility and some other issues that we've had to contend with. It doesn't, not that we've gotten complacent, but that doesn't sound as bad as it might have sounded in 2016. So Mark, my question to you is, because everyone that's coming on my show, other people that I hear on financial media, are almost relieved that we're getting the election out of our system. We might not know the result, but we're at least getting election day out of the way. And there's an expectation that volatility will eventually compress after we go through the next few days and months. So what's the strategy here? I mean, is it like a no-brainer sell vol? I mean, that kind of seems a bit flippant, but it seems as if everyone's kind of expecting the same thing.
Yeah, you know, if you look at the option order flow on the VIX contract, it has been so one-sided, it is astounding. There are zero call buyers and put buyers everywhere. I was looking at the December contract in particular, is where a lot of the vol fading is taking place. We are seeing huge volume on the December 26 puts, the December 23 puts, the December 19s, and the December 20 puts. Huge volume across the board. Yesterday, on November 2nd, a customer came in and bought over 50,000 of those puts. When they eventually list puts on VLQ, the vol Q options, I think you would see very similar type paper flow. Just lots and lots of fading. I cannot remember the last time I saw paper so one-sided in the VIX contract itself. To put things in perspective, of the 10 biggest open interest strikes in the VIX right now, 9 of them are puts, which is off the charts, astronomically high. There's actually more open interest in puts right now than there are in calls. That's just something we never see, except for, you know, what we're looking at right now.
Right. But and it was the exact opposite heading into the election, is what you're saying.
Yeah, you know, in 2016, you had hedgers coming in and buying calls just to protect themselves against, you know, the Donald Trump win, and lo and behold, that paid out. Now what we're seeing is a giant fade of this election volatility. Most of the big paper is betting that by December, the VIX and vol Q are going to be sub 25, maybe even sub 20. There's some very inexpensive plays in the low 20s and high teens in VIX that maybe makes some sense in the December contract.
Right, and it almost seems as if it's irrespective of who wins, just as long as we understand who that winner is definitively, because then we can start to trade based on policy. We have not been able to do that.
I agree 100%. I think that an outcome is the way what the market wants and what will cause volatility to fall quickly. And you know, if you look at the price action of the Nasdaq and the S&P 500 today, it's pricing like there's going to be some sort of outcome.
Yeah, I'm sure everyone is certainly looking forward to that. And Mark, of course, we'll catch up on the options expiration Friday this November, and it'll be interesting to see exactly where we are at that time. Thanks for joining us on Trade Talks as always.
Thanks, Jill.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.